everyone. My name is Dewald Nolte, and I'm the Chief Strategy Officer for Intersect. Thank you very much for joining my session, where today I'll be talking about secure open banking and turning compliance into a competitive advantage in such an environment. So a quick introduction to Intersect. We're a globally trusted fintech specializing in strong device identity and authentication solutions that make the online world a safe and convenient place for end users. We started in 2010 and we've got offices across the globe, started up in South Africa, and after having quite a successful proof of our technology in that market, expanded up into Africa, Europe, and North America. And I'm based in Atlanta with a team here where we'll look after the North American and LATAM markets. We're live in about 46 countries and do roughly about just north of 1 billion transactions per month. So quite some good volume that we see coming through the systems, and some interesting attacks from the fraudsters that we have to deal with on a daily basis. So what is open banking? Open banking is the practice of securely giving providers access to financial information via open APIs. So opening your banking services via API, effectively as an SDK to third parties to build their own applications on top of that. So quite an interesting and scary, I guess, thought from a bank's point of view. But of course, this whole initiative being driven by the aim to really supercharge innovation and competition in the industry, as well as to make sure that the third-party providers are accessing our services in the financial space via secure APIs versus practices such as screen scraping that's in the market that has to be used in the absence of open APIs, and also to give users the ability to really have choice in the market, right? Being able to leverage some of their existing capabilities to make registration for other services easier, to consolidate services, all of this really making sure that users at the end of the day benefit from all the services and that they can really bring it together in a very convenient way. So if we look at a reference market, obviously the one that really is the best reference framework at the moment is without a doubt PSD2 in the European Open Banking Framework. And what's quite interesting about this one is just the structure in terms of who the players are, or the roles of the players in the ecosystem. So they define three different players, the first being an account information service provider, which is a service provider that can expose account information to third parties that want access to that. In the case of Brazil, this concept isn't really there. It's only the banks that really themselves would be these account information service providers, but the rest of the players in Brazil definitely the same as or similar to the PSD2 framework. So the PISP, payment initiation service provider, being a third party that can initiate payment services against open banking APIs. And of course, the other one being the ASPSP, account servicing payment service provider, which is just a long way to say the bank. So the service provider that actually hosts and looks after the account. And so that typically is the bank. And of course, as I hinted to earlier, say hello to the Super Financial app. Really interesting to kind of start to see these initiatives coming into the market where under one app, fintechs are now able to really bring a complete financial experience to users, which really is quite convenient and exciting from a user's point of view. So we look at the open banking landscape in Brazil, the Central Bank of Brazil, defining 4 phases for the rollout of open banking in the region, starting in February 2021. The first 2 phases look at opening account information, to the public, and specifically not the public, but to the participating institutions. And certainly here, what's interesting is that these first 2 phases are aimed at just the biggest institutions in the market. So typically the 10 to 12 largest banks in the industry really participating in these first 2 phases. And then in phase 3 and 4, where we go into more of the opening up of further services into the payment initiation phase, that being open to a wider audience, so to speak, in the Brazilian market. So more institutions being able to participate in that phase. And that's really where I think we'll start to see true innovation and really some speed being picked up in this initiative. So if we look at that just a little bit closer, again, as a summary, the first phase, the account information phase, looking at the scope of that, products and services being some of the information that needs to be exposed by these institutions, as well as personal data, if the client permits, where banks must release personal data, including their name, tax identification number. So relatively sensitive information that can be exposed via this API, which is quite important. And then that second part, or that second phase really, where we look at the payment initiation phase, adding to that information transactional data and payment data, so to really kind of give a complete set of banking services that are exposed via that open API. So to look at it a little bit further then, 6 steps kind of being defined by the central bank to say, hey, this is typically how, when the process for requesting data and the steps you would need to go through to actually get access to that data. So as a institution requesting information from a user, you would start by requesting the data and scope of which you want access to. So a request to share, which is the first step there, which would then redirect you to the bank that has, that is hosting that information, right? So the user would then, as a step 3, need to authenticate themselves to that bank to make sure that they are actually the account holder, and then give confirmation, right? So consent from the user for the scope of the data that will be shared to the requesting institution, after which the user will be redirected back to the institution that requested the data. And at that point in time, a notification will be given to the user to say, all right, everything's fine. This scope of information that we requested is now active. And so we now have the ability to leverage that information as consented to by you. So those are the 6 steps typically in sharing data in an open banking ecosystem. And I guess a big question then is to ask, right, it seems fairly simple. Why is this channel so different? And I think one of the big differences to this channel is the fact that it is governed by privacy laws. And so if you look at, once again, looking back to the European example, GDPR being the privacy law that governs that open banking initiative, and the equivalent, of course, being the LGPD in Brazil. And what's quite interesting there is, if you look at the exposure or the risk profile of this channel, it is just vastly different than your typical banking channels, where typically if you have exposure to fraudsters via your online banking or payment channels in a bank, you're typically limited to, I guess, the attack that the fraudster, the money that the fraudster is actually able to extract from your account. Whereas in this case, under the privacy laws, the regulator can really slap a big fine on you if you're not adequately protecting the personal information of the end user. So really important difference here in terms of this new channel that you're opening as a bank is the fact that the protection mechanism that you need to put in place for this channel really needs to be very well thought out, and probably the best state-of-the-art systems that you can put in place, because of the fact that getting it wrong really has a very high penalty associated with it. And here are some examples. I mean, if you look at recent fines in the European Union, an increase of roughly 40% from 2020 to 2021 in terms of the number of fines being issued under GDPR. Total penalties reaching 158 million euros. So, a big amount. And then lastly, if you look at some other examples, Google, 50 million euro for breaching some of the privacy regulations there. British Airways, 22 million euro. Marriott Hotel Group, 20.4 million euros. So big amounts for getting this wrong. So really make sure, and a big requirement to get security for this channel right, and a big motivation, of course, if you look at the size of these fines. And so what are the best practices then to secure this channel? So let's quickly look at that. So if we look at the 6 steps defined by the central bank here, step 3 and 4 really are the high-risk steps in terms of sharing data. This is where the user needs to authenticate themselves to the account servicing payment service provider, so to the bank, to say, well, I am the owner of the information, to give me the access. And then, of course, step 4, confirming that the scope and the duration of the data that I actually want to share, then I give consent to that. Those are the 2 really important steps from a security point of view in this process. And if you look at the lessons again here, if we look towards PSD2 for some inspiration and some lessons learned in this space, what's great about what PSD2, the PSD2 framework did was it has a regulatory technical standard that defines a framework for strong customer authentication to ensure that adequate protection is in place for this channel. And so that's quite convenient. Of course, that really helps us to understand what the best practices are to really open this channel, to the third parties from a bank's point of view. And from an RTS point of view, there are 3 main principles that I think are worth highlighting, from best practice point of view. And they are authentication principles, which we'll look at into a little bit more detail in a second, channel security, and then dynamic linking. So let's look at that. First one being authentication. So PSD2 regulation introduced the need for strong customer authentication, or SCA, on all remote transactions unless exempted, and some exemptions kind of existing for transactions under a certain amount, or if they're a fraud over a certain period of time on the channel is less than a predefined threshold, that would be exempted. But the point being that strong customer authentication, certainly as you start out, has to be in place for this channel to really operate. And it defines specifically the principles of multi-factor authentication. So making sure that you have a combination of something you have, something you know, or something you are. And you have to at least have 2 of those factors to comply with the requirements for strong customer authentication. What we've seen is that something that you have is typically a very good part of the solution. So typically what you want is something that you have, and then one of the other 2 as a combination to that, to make sure that you have a strong security profile in place. The reason for that being that something you know or something you are, these are capabilities that could be replicated or copied without your knowledge, whereas something you have, a true possession factor, is something that the user typically would notice if it's gone. And of course, that really protects against an attack at scale due to the fact that it is a personal possession factor, which would require a personal or a targeted attack to be successful. So that's from a authentication point of view, something that's really important is the multi-factor principles that needs to be in place, and the regulation actually forces you to comply with that, which is great. The second thing being channel security, and here this is quite interesting, and again a fantastic principle to have in place. The regulatory technical standard actually looks at channel security, right? Making sure that the channel of the device or the mobile app through which the authentication code is generated and received to be independent or segregated from the channel, device, or mobile app used for initiating the electronic payment. So typically what that means is if you look at the image that I have at the bottom of the slide here, at the top, that initiation channel there, if you have a mobile app or a, whether that be a browser, if you're initiating a payment over a channel and there is someone kind of looking at or listening in on that channel, what you want to make sure is that your authentication channel is not susceptible to that same vulnerability in that channel. So you want a completely separate channel for authentication to be sure that you are not compromised. And that's a very good principle, and certainly one that we back 100%. And then lastly, dynamic linking, or really just, I guess, another way of saying transaction signing, right? So dynamic linking, again, being very, very well described within the regulatory technical standard, saying that when signing a payment transaction, the payer shall see the information, so making sure that the information is actually displayed to the user, and the amount and the payee must be part of that. And then, of course, the integrity, confidentiality, and authenticity of this information shall be ensured through all phases of authentication. So again, making sure that the integrity of that information is kept intact throughout the entire authentication process. So what that comes down to is the old principle of what you see is what you sign, making sure that what a user is actually consenting to is the same information that actually is being shared behind the scenes. And that's not necessarily as easy to achieve, but of course, a technical challenge that is required to really make sure that what the user consented to is what is behind the scenes actually being shared. So those are three very, very important principles that have to be adhered to make sure that the way that you secure that channel is your open banking channel, that is up to scratch, and that you are meeting the minimum standards. So this is something, of course, at Intersect that we've been doing for more than the last decade. So our solution is fully PSD2 compliant. Doing things like dynamic linking via digital transaction signing. And we've got a great user experience for that. And I think something that's also worth mentioning, which I didn't mention previously, is of course you want to make sure that your solution also works offline. You don't necessarily want to be in a position where you're not able to authenticate if your mobile device, for example, doesn't have data. So something just to also look into to make sure that you comply with that. We've also got independent validation to make sure that the solution that we have in place is actually compliant. So our solution kind of being really validated and proven in the market as compliant with those very strict regulatory technical standard requirements, which is great. And we have three ways that we can actually deliver this solution. The first being like a white label auth app. So for banks that don't have their own application or that really want to get to the market quickly, we have a white label auth app. You give us your brand, you give us some language packets, and we compile an application for you that is branded with your own branding and supports up to 13 languages that you can then push into the market quickly and comply with a best of breed solution into the market. The second one being, if you have your existing mobile application, you want to include, and this is the one that you want to definitely drive towards, where we actually have an SDK that you can bring into your own mobile banking application and actually benefit from that solution within your own banking application. That's pretty much, I'd say, the Rolls Royce if you want to get to that. So if you really want to get into the market quickly, go for the white label auth app and then eventually move over to the SDK in the mobile app would be a recommendation. If you don't want to go for the full SDK in your application already right from the start. And of course, we also have some solutions for a web interface, right? If you're not using a mobile device, you want to use something like FIDO capabilities or a web based solution. So we have some authentication options also for a web that doesn't necessarily require a mobile application. So from a speed to market point of view, as I just mentioned, two ways that we can help the bank to comply. The first kind of being an end-to-end open banking solution where we've put an ecosystem that's modular in place with some of our partners. Typically, if you look at an an end-to-end open banking ecosystem, you'll have the third-party providers to the left there. You'll have an open banking API that actually exposes the bank's capabilities, to the industry. So we have some partners that assist with that, and then some middleware partners that really help us to tie that into your backend, in a very quick and seamless way. And so we've got a partner here, partners in these areas to really help put this ecosystem into place. And of course, that white label application at the top there, indicated with a DKB there, that helps you to quickly put a branded application into the market, that you can over time then actually bring back into your own mobile application. And so why this is important is what we've seen, and this is something that happened as recently as in the last couple of weeks. We saw the UK regulator come out to push strong customer authentication compliance in the UK out from, I think compliance was supposed to be this year in September. Everyone had to comply with the regulation by then, and it's been delayed a number of times. Recently, once again pushed out from September to March of 2022. And what we've seen there is that typically the banks will try to, just tick the compliance tick box. And what then happens is you get into the cycle where you're always trying to kind of just comply, kind of doing the minimum to actually comply. First of all, what we've seen is a number of those banks typically end up in the media for the wrong reasons, with the wrong headlines. But secondly, what happens is you're spending so much time continuously trying to meet that minimum bar that while all your competitors that actually invested in the right solution that's future-proof right from the start, while they're focusing on leveraging this new channel for innovation, you're in a continuous cycle of compliance, spending a lot of energy and continuous time to keep up with that. And we've seen that with a number of clients coming back after 2 to 3 years even, at first saying, hey, we're just going to stick with what we have to just tick the minimum boxes. And then 2 to 3 years later, coming back to say, actually, that was a bad mistake. We need something more comprehensive that is more future-proof and more modern, that can help us to comply and also to take care of some of these more advanced use cases that we know comes through the innovation journey of open banking. So one of the best pieces of advice and lessons learned from the PSD2 experience that we have is to say, rather than try from the start just to kind of do the minimum to reach that tick box, spend the right amount of time to get a partner that has done it before and that understands and that's got a solution that actually is future-proof and that is proven in the market, because you'll find that saves you a lot of time and will give you the competitive edge, because the majority of the market, unfortunately, no matter what I say today, will still just rush and do the minimum to actually comply. And for the ones that actually hear the message today and decide to do the smart thing and invest in a platform that's future-proof and that can actually help them get ahead of this compliance burden that continues to go, will be the ones that actually are able to really move fast in the market. And in a digital world, user experience and moving fast is what will make you win. And so that is something that we've learned and seen, where a lot of ground was lost by players that were really dominant in the market due to the fact that they chose not to invest right from the start in the right solution that could take them through into this new journey, which is open banking. So coming back to this example here, this is one of the ways in which we can help banks to really put in place a future-proof solution that helps them comply, but lays the foundation to actually move fast, for all the future phases that comes with an open banking rollout. And then a second one here is to say, well, as you move to your own bank app integrated solution. We also have that. And let's say you have your own open banking API partner already. No problem. We can link in the solution with that. Put our SDK in your banking application. And that's really actually where we want to get to, because that's really where the full power of the solution comes into play. So quick to market, white label auth app with our partners for open API and middleware. But if you have your own, we can, augment with the capabilities that you haven't looked at yet, and plug into your existing systems with an SDK and our backend capability to really bring a regulatory compliant, future-proof solution that has been tested and proven in the market. So what does that look like? So what does the end result of this journey look like? Here is my financial advisor example, wanting access to a lot of my details. And as I confirmed that I actually want to go ahead here, we'll look at EDT Bank being my bank, select my bank there. So EDT Bank is the one that I select, which then redirects me. So if you think about step 1 is the request, step 2, redirect to edtbank.com. Here I'll do a passwordless login, right? So hello, Alice, authenticate yourself to the bank here for login. So there we do an out-of-band push auth, just for a quick authentication into edtbank.com. There is the request for the information, right, with all the details. The user confirms. We have Alice also here then consenting to the scope and the duration with strong customer consent. So digitally signing that and having biometrics to make sure that that is a digitally signed transaction. And then, of course, after that confirmation of the scope to be signed, will be redirected back to my financial advisor, where we'll get the notification that everything's now in order and there is my data, and it can be used by my financial advisor to actually, in this case, show my financial information in a nice dashboard, which EDT Bank did not have as an option. So that's what it can look like. And just to kind of then recap on the message here today, securing your open banking channel really requires a modern, future-proof solution. Don't make the mistake to try and do the minimum, the bare minimum to comply. That is a very expensive decision that you will make, and certainly one that you will pay for the next couple of years to come. Invest in the right solution right from the start. And again, I guess just to re-emphasize that, underestimating the importance of this, I guess the scars on my back in terms of seeing some of the clients doing this wrong, whereas some of our clients that have had our solution really didn't have to do much when PSD2 came into play, because they were already compliant. And while everyone else was trying to scramble to kind of comply, our clients could focus on innovation and their other projects. So really emphasizing that is really, really important. And from our point of view, we've put together an end-to-end modular partner ecosystem to complement and support banks with a best-of-breed quick-to-market solution. So if you need to get to the market quickly, reach out to us. We can really help you. We've had to do this many times before, and our partners really, our partner ecosystem enables us to put that end-to-end system in place in a really, really quick way and lay the foundation for you to actually start innovating in the market while everyone else tries to catch up with the changing ecosystem and environment. So for more information, contact us at info@intersect.com. And thank you very much for listening today. Love to hear from you.